Hey, Money Masters and Treasure Hunters, welcome to November 20th. Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom for the day. Hope everyone has had a great Thursday. Let's make sure that we have a wonderful, wonderful evening. Make sure that you hug somebody. Hug all those folks that you love out there. Our call number is 877-927-6648 internationally, 727-445-1044. For those of you that may not be familiar with me, I kick things off. Well, I don't kick things off anymore because the Hotel California opens at 8 o'clock. Our man John Logan kicks things off. I do 2 hours from 9 to 11 each and every day. Those shows are archived on Channel 9 and Channel 10 out here. So let's get right to these markets. Right now, Dow's up 6 points. S&P is up 1. Composite up 20. Russell 2000 up 9. I got a number of emails based on the first couple hours I did today, and talking about my positive attitude and then also my bullish outlook. And so some folks were like, how is it that I could have called a bottom in October? Why is it that I have such a bullish outlook? Because what I mentioned is that this morning, as we were taking a look at the futures markets, so let's just recap for a moment where we are and where I believe the markets are going to, and the importance of really today's low. If we take a look at the Russell 2000, this is a 120-minute chart, so we're just going to backtrack just for a moment. If we take a look at this chart here, if you watch us on Tiger TV, in HD no less, so that's a beautiful thing. And this chart here, I'm just going to pull it back to the October lows. Now, in this case here, it was October 12th, October 13th, when the Russell 2000 made its lows. All the way up here, it's made just some very shallow retracements. Now, this is the first A to B equals CD down pattern that the Russell 2000 has made. If you were an aficionado of H.M. Gartley, and quite frankly, you should be out here, and we just had absolutely one of the largest moves that we have seen, both vertically with regard to the V-shape, 13 straight days in a row with the Dow making highs. Now, that's not all time. There are other periods of time where the Dow has gone on. In fact, back in 1987, it actually did, I think it was 20 sessions in a row. We can take a look at all that data. But my point is, if you were a person that believed in the Gartley pattern, and I'm one of those folks, well, what we just did here yesterday and today was just confirmed the next Gartley buy pattern out here, because we had our first A to B equals CD to the downside inside the week indice of all of them, and that is a buy signal. And when we did this here, this is part of what I'm going to be teaching to folks in my course here. It's a 7-week workshop that begins this coming Saturday. So I'm going to teach folks these patterns, and it doesn't matter what level you're at. My whole bailiwick is being able to take things that are complex and make them simple. That's what I'll do, and that's why I'm also staying with you for a 7-week period of time. But bottom line here is we saw a hammer candle that actually formed at the 1-to-1 A to B equals CD to the downside. Now, that occurred yesterday at 12 noon. Yeah, and this morning here we saw prices kind of push down, couldn't bust through that level out here. So we've got a confirmed Gartley buy pattern. Now, oftentimes these can turn in their own A to B equals CD patterns to the upside, but I just want to point out the what's going on inside the Russell 2000 on the 120-minute time frame. If we actually go over and take a look at the daily chart, just to put this in perspective and utilize all the different tools that we have here at TFNN, of course, the daily chart made one of my favorite patterns. We'll be reviewing this during the workshop as well, and that is where price moves lower with less relative weakness out here. That's what happened as the lows were being formed inside of the Russell 2000. Those lows here coming in on October the 13th. Confirming pattern that took place on the 14th and then on the 15th, that little second opinion. Well, guess what? Only in the third wave to the upside out here, and we just made a Gartley buy pattern on the 120-minute chart. Now, why am I a little bit perplexed? Because I've been looking for the market to actually move down a bit after that October 31st move to the upside. If you caught the show that Tom and I did on that Friday, what I was really looking at, and I'll show you right now, actually, let me do this here. It makes it a little bit easier to actually put the slide up here. This is the slide. This is the pièce de résistance out here. This is why I can tell you, this is why I can say with conviction that this market's going to go up into the end of the year, maybe beyond that. For the last 43 years, this is the data for the last 43 years. Now, what I've done is I just simply took out 1987. I didn't need the October data messing with this chart out here. So if you were a person that believed that chart patterns repeat, and I'm certainly one of those, and I know that you are one of those as well, well, if that's the case, and I were to ask you the question, hey, when does the S&P 500, this is the S&P 500, by the way, when does it traditionally make its low during the 6-month unfavorable seasonal cycle? That means from May through October 30th. What would you have said? Well, if any of you would have said that actual date comes in right around October the 9th, you would have been right. On average, that's when it comes in. Now, we don't need to get date specific here, but when that low comes in, and we saw ours come in on October the 15th, 16th, 13th, if we take a look at the Russell 2000, you think that's coincidence? No, it's not coincidence. It's when the lows get made before the Santa Claus rally actually begins. And then what happens? Price moves up into the early part of November. This year here, we had that election that was going on. That actually made sense. November 2nd is the actual date out here when that high should have been made. Well, October 31st, we had that big push up because of the Bank of Japan and so forth. Then what happens is the market moves down. It moves down one more time. That one more time, actually, the date, I had been saying to folks, November 21st, tomorrow. I said that back on October 31st. No, I'm not really date specific. If you wanted to get date specific, you'd say November 17th. That's on average when that actually takes place. So now, when we take a look at what's going on, now, on top of that, just to give you a feel, let me just put this back up here, just to give you a feel, it's really not me that's bullish, it's the market. It's just simply reading the signals of the market. If we allow ourselves to read the information that the market provides to us and be willing to change it at any moment. If the market overnight, we see some big sell-off or something happens, I'm always willing to come back and start with a clean slate and see what's going on. Now, in the last 40 years, this is a chart that I put together here. Marty Zweig has a lot of great tools and indicators out there. In the last 40 years, there's only been 4 of his Zweig thrust signals out here. We've seen 2, basically, in the last year. The last one came back in October of 2013, of all things. Now, remember, I just went through a chart that showed that the market makes its lows in October, certainly over the last 40 years. And October of 2013, we get a major bottom signal, a Zweig market thrust signal. Well, guess what we got this time around? I don't have it notated on the chart. We got the same gosh darn thing out there. So this chart, it doesn't get too much more bullish than this, and that's why it's not really me. It's really what the charts are saying out here. So what does that mean? What does all that mean? Well, if we go take a look at the S&P 500, let's take a look at the S&P 500 index. It's flat today. No big deal. We've seen a series of doji candles. Those typically mean the market is tired. That's why I believe that the market was going to pull down. Now, I was willing to go ahead, and I still am. The school's out here just yet. I'm kind of on the fence and really interpreting this here. We have in the case of the S&P 500, you get these dojis out here, but prices up above those little dojis in Stevie's window out here, and that says, okay, maybe the A to B equals CD to the upside, which is what's going to take place out here. And by the way, that A point, just to give you an idea, and this is what we'll be covering during the workshop here this coming Saturday, which you're welcome to attend. I'd love for you to attend because I will take the complex and I will make it so simple. I will show you things that are sitting in front of you. It'll be like with a great artist, with a great restaurateur out there, a great chef. If we take a look at this A to B equals CD to the upside, we go take a look at the ETF structure. We got confirmations out there. Forget about those high volume moves to the downside. Quite frankly, I've got another chart out here. I don't know if I can pull it off today that shows that all this move in the VIX and the move to the downside, it was really all Ebola related. And Ebola, Ishmola, it's now at least out of the market, out of the U.S. for the time being. 1 A to B equals CD says 2102. That is not where the S&P 500 is going to top out. And I'm not even saying top out, but move to between now and the end of the year. Now, it's more likely headed to 2178. And don't forget, we've got a measured move inside the S&P 500 that takes us to 2350. So we cannot rule that out. So we've got history on our side. We've got Marty Zweig's thrust indicator. We've got that on our side. We've got one of the strongest V-shaped bottoms that has formed since March of 2009, if not the strongest out here. We should not ignore these messages. If you're bearish, be absolutely careful out there because even the best of signs just seem to keep failing. Right now, your best sign here would be if the composite closed right here, right now, because at this stage here, if we take a look at summation index, it's still just turned down slightly. But let's face it, it's really flat for the day. So there is trouble in River City under the covers, but that trouble can be resolved very, very quickly. This is the Tom O'Brien Show. I'm Steve Rhodes. I hope you are having a great Thursday. Thanks so much for joining us. We'll absolutely be right back. We're going to go out to Las Vegas to our man, Andy Heck. We're going to go take a look. We'll talk about A to B equals CD patterns. Let's go take a look at natural gas when we get back. We'll be right back, folks.
Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom. And real quickly, I go back to that summation index for the NASDAQ composite. And as one of our Tigers so aptly pointed out, we did have prices moving higher out here, if you're watching us in HD on Tiger TV, with the price oscillator moving lower. Now, the more important thing to really identify on this chart is that as prices were moving higher into October 31st out here, we had this indicator moving to the upside. That is also another indication of an initiation move. So we put that together with the Gartley buy, with the weak pattern being the Russell 2000, with the Zweig thrust, with the seasonal patterns out here, and with the lack of price damage in the market. And right now, if the NASDAQ closed like this with a negative oscillator reading, it's where I still say I'm cautious. We could still see some kind of retracement into next week. That pattern that I showed you where the lows are being made, remember, this may have shifted by about a week or so we'll be real careful out there. But, hey, Mr. Sunshine is on the other side of the country out here. Let's go to our man, Andy Hecht. Andy, how you doing today?
Hey, Steve, how are you? Nice to talk to you.
Nice to speak to you as well. How are things in Vegas?
Everything's good. It's, people are complaining that it's really cold here, and it's 52 degrees.
Yes.
I'm kind of laughing at them. I got back from New York 2 weeks ago where it was, in the high 30s, and now my sons tell me it's in the 20s, and I know what's going on in Buffalo, and I'm very happy to be here.
Yeah, absolutely. You bet.
Yeah. Natural gas, I heard you want to talk a little bit about natural gas. Very interesting market here.
Yeah, and we can take a look at natural gas. We can also look at the UNG, and I'll just bring up the UNG first. Then we'll go to natural gas contract. What I really wanted to point out to folks here is that there's a B point that had volume out here, 23.49 from November the 7th, 16 million shares. Today we're at 20 million shares. Yesterday we were at 20 million shares, and any close above 23.49. You're just slightly below it right now. You've got a confirmed A to B equals CD pattern. That'll take you up to more than $25. But what is it that you're seeing as we take a look at maybe the January contract? What are you seeing?
Right, and I have a chart of that up here. Let me put it up there. Basically a couple of things, and I'm going to talk more. I know you handle the technicals. I'm going to talk more from the fundamentals, then I'll make some comments on the technicals. Fundamentally, what we saw today, the market was expecting a 12 billion cubic foot draw in natural gas stocks. The number actually came in at 17 billion cubic foot draw. Now, this is the number as of last week, and it's remained cold, so I'm expecting another draw next week, and today was the first draw of the season. Inventories now stand at 5.3% below where they were last year at this time, and 6.4% below the 5-year average. And, if I look back over the last 11 years, natural gas, during those years where we went into the winter with inventories below, and we're starting a very, very cold early winter here, natural gas prices, we're north of $8. So I think it's totally possible, if the cold continues, that we will see very good price action to the upside this year in natural gas. The only thing I would say is that after this current cold snap is over, it's highly likely that we'll get some warming and natural gas will fall. And I'm looking at a gap here on the charts that happened between November 16th and November 14th and the 17th. So it's a gap on the weekly charts and the daily charts, and it's between 422.30 and 418.10. These gaps tend to get filled, and that is the buy zone. That is the entry zone for anyone who's sitting here flat looking for a place to buy. Steve, after the number came out today, the initial action was actually down in natural gas, and natural gas prices were down on the day. I guess some profit taking and so on and so forth. But now we've actually gone up. We've surpassed yesterday's highs. We're trading just below them here. We're at 447.10 on the December contract here, and 462.20 on the January contract, and this market looks good.
Yeah,
but it's a weather market.
I think that I saw natural gas trade off earlier this morning. I think it's kind of similar to my take on what went on in gold yesterday. It was they're just trying to shake the weak hands of the market here.
Right. And we saw it again in gold today. Look, gold's up a little. It's up marginally right now, but we were down $18 below here earlier today.
Yes, absolutely.
During the session. And switching to gold for a minute, I know last time we spoke, I was kind of bearish on gold, but I've changed my tune here. Through November 30th, I'm pretty bullish on gold and silver and platinum here. I think the precious metals are going to get a lift. Gold's basically on trial, and this November 30th Swiss referendum is going to give the verdict. in the short term.
Okay. Well, if the large commercial traders have anything to say about it, they're glad that you moved over to the dark side with them and with me out here, because what they've been doing, even through the last couple of weeks, as we had seen gold move down, they were getting to even less net short positions out here. The type the type that is absolutely bottom worthy. So I agree. I mean, look, I wrote this thing down as low as I could. We got down to like 1130.
I reversed. Right now, I think that, the Swiss referendum is very important for the gold market. And once that's over, even if there's a no vote, it's the direction of the dollar. It'll go back to dollar trading. But right now it looks good. And quite frankly, I really, really love platinum here. I think that's made a very nice bottom. And I think that silver has been great. We have 2 consecutive Fridays in a row in gold and silver of bullish key reversals. That's a pretty bullish pattern. No question. And the big money guys out there, at least what I like to take a look at some of the COT data on each Friday afternoon or Saturday, and I like to benchmark, hey, what's going on inside the currency marketplace? So where are people taking their positions against the U.S. dollar? What's going on in gold and silver? What's going on in light sweet crude out there? And it's silver, the same thing. They've all positioned themselves, and when I say they all, meaning large commercial traders, if they're reporting accurate data, they position themselves for the U.S. dollar to take a tumble. They've taken the position that gold and silver are going to move higher. And as I like to, one of my favorite albums out there, a guy by the name of Matt Bianco, and one of his songs was "Slipping Out the Back Door." And I think that's what gold and silver, they're just kind of trying to do it quietly. And yesterday was just enough to scare people away from saying, I don't know if I want to. I think that's maybe more so what we saw going on there, maybe with natural gas. Right now, I think in gold, the path of least resistance is higher, until November 30th. And, hey, 10 days in these markets is a lifetime. So we'll see what happens after that. But, from a fundamental point of view, if the Swiss vote yes, on this referendum, that means that 1,500 metric tons of gold have to be bought over the next 5 years, Steve, and that all the gold outside of Switzerland that the Swiss own, their gold in London and in the Federal Reserve in New York, has to come back within the borders. That'll make the gold market very tight. So this is a very important referendum from a fundamental point of view.
I might have to see if I can get a ballot and vote my Swiss heritage out there. Hey, Andy, always great to talk to you. Have a great time. Give Tom a big old bear hug for us while you're out there.
I certainly will. Talk to you later.
Take care. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks, to the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom. Let's go back and check out these markets out here right now. We've got the Dow up 21 points, the S&P up 2, Composite up 21, Russell 2000, in the lead percentage-wise today. Let me go take a look at that. It's up 10 points. That's about, 0.9%. So the Russell 2000 pretty much garnering back all of its gains from yesterday. When the Russell 2000, Russell 2000 won't necessarily pull the indexes higher, but when the Russell 2000 is in the lead, it just tells you about all the liquidity that's inside the marketplace. Now, liquidity for our market primarily comes from currency pairs out here, cross pairs. At least I take a look at 2 different currency gauges. One of those gauges being the Euro-Japanese yen. This currency pair tracks the U.S. market better than any other currency pair out there. Now, right now, it's well off of its session highs. Actually, if it closes like this here today, you'd have a shooting star, which could be resistance out here. We talked about it earlier this morning, this blue horizontal line. So if the bears have any hope out here, and it's really not so much bears, just some selling, just some profit taking, maybe before we go into Thanksgiving as we start to wind down the end out here, would really be the Euro-Japanese yen pulling back to the 145.68 level. That is an old area of resistance, should become support out there. So any pullback there, we could see the markets move a bit lower. But as I pointed out, if you caught the beginning of the show, we take a look at those seasonal patterns, and they were one of the beauties of being able to help identify the Gartley buy pattern that had set up inside the S&P. It was a butterfly buy that set up inside of the Russell 2000. Inside of the IWM, not everybody keeps track of the indices. So one of the tools that I will be teaching you, sharing with you inside of the workshop, and we take a look at the IWM out here, it's certainly going to be the Gartley or the butterfly buy pattern out here. And if we take a look at this pattern, that's coming off of the swing point. We'll go ahead. We'll use our coloring tool to be able to paint that in. We're utilizing the low out here from May the 15th all the way to the high that was put in on July the 1st. There's your 1.272 butterfly that came in. First butterfly, by the way, since we saw lows out here back in November of 2012. First stretched pattern to the downside. And what's really interesting about this pattern here is if you go from that swing point low all the way to the high that was put in here inside the IWM, you're going to see it was an exact 0.382 retracement. Now, if you want to understand the power of a 0.382 retracement, just go ahead and take a rubber band that's on your desk. Just wrap that rubber band as tight as you can around that index finger of yours. Back it off only 38.2%, and then let it go. And what kind of energy do you have there? Well, what do you got to benchmark it against? Well, what you want to benchmark it against is a 0.618 retracement. Take that same rubber band, wrap it around as tight as you can, back it off 62%, let it go. What kind of energy? Which one has more energy? Yeah, the 0.382 retracement. And when you take a look at this bottom that is formed here, now, here's the real key. Probably the real key we get, just like today we had really our information about what the market wanted to do by taking a look at weakness inside the market, and that was really the Russell 2000. If we take a look at the IWM, it has been consolidating, for a period of at least 12 months, maybe even longer. Well, you say the consolidation from September 2013. We're in November 2014. This is in a huge consolidation. Now, should price break the top of the consolidation pattern out here, that would be called a measured move. And when you break a consolidation, price will move equal to or greater than that. Well, if we take a look at the IWM, if it does, I don't have any guarantee that it does. I can tell you what we want to look at if it does. Well, if it does break that consolidation high, which I suspect it's going to, then you're going to see a move in the IWM up to 137.50. Look, the actual long-term 16-year, 11-year, I don't recall what it is off the top of my head, consolidation pattern inside of the Russell 2000 has a completed measured move on its monthly charts to take it to 1350. 1350, 1370, we're right in the range out here. That's the patterns that are in play. So you don't have to trade the small caps, but you want to pay attention to what's going on inside those things. And look, if the Euro-Japanese yen, which has broken out of a huge long-term trend, let me come back. I'll show you what that looks like out here, just so we can put things in perspective. We'll come back to the Euro-Japanese yen. And this happened a couple of days ago. I'm going to put this on the monthly chart, just so you can see the type of trend line that is out here. Got to just scrunch it. That is a technical term. By the way, this coming workshop, this coming Saturday, I'm going to teach people how to scrunch, because that is a technical term out here. No, I'm just kidding you. What's the heck? What's going on here? I got to come back to 1979. I got to really pull it back here. Okay, if we take a look at the Euro-Japanese yen, let me get rid of the expansions out here. Let me get rid of that. Just clean up the chart. There you go. So here is the Euro-Japanese yen. And if we take a look at this coming back to its high back here in December of 1979, we use that as a trend line because that is the accurate trend line. And we use the highs out here from June, July, August of 2008. And then we fast forward to where we are at right now for the month of November. And yes, this is a monthly chart, but we put it on a weekly chart. It's the same trend line out here, and we've broken through it. And we've broken through some horizontal resistance out here This thing is setting up to move to higher price. We just broke a trend going back to 1979. And this is the currency pair. By the way, this is a currency pair that tracks the U.S. stock market better than any other currency pair out there. I'll just go ahead and put that chart up on the screen so you can see what it is that I mean out here. Just give me a moment to track this down. This is starting to get a little bit noisy. I've got all these divergent charts out here, but it'll stick its head out at me in just a moment. I know that it will. Come on, where is it? ES Mini, dollar, Russell, dollar, euro, Japanese yen. It's right there in front of me. I know somebody was knocking on the door saying, hey, look, take a look at this chart here. This happens to be on the bottom portion of the chart, the S&P futures, the ES Mini compared to the euro. It's a directional correlation, by the way. There's no tick for tick out here. But if we take a look at the directional relationship, by the way, when we see a divergence in direction out here, it's the euro, Japanese yen that ends up winning that battle. There's no divergence in direction here. This thing's broken out. It's moving. It's moved to higher highs. The ES Money has done that as well. We put together all of these different tools out here. The market wants to move higher. It's not because I am taking any one position over another. It's about reading the message of the market. And you know what? To get to this point comes with tremendous cost. First of all, the number of hours. I have logged in more than 10,000 hours for sure. And no matter how positive of a person I am, and I am, because I know how to reframe and elevate myself when the universe throws even the worst possible crap at you. And you've got to be able to do that. You know how to do that as well. And what I can tell you is the cost to be able to understand all of this, the cost to be able to truly master. Look, all that I've really done is I've taken the great works of really good artists out there and I've made it better. It's just the way that everything works in life. If we were still using the incandescent light bulb or the, that was originally, developed out here, if we were always using original stuff, we wouldn't have the phones, the power of the phones. Right? Everything is always getting better. It works the same way in technology. What we do is we take a look at the works of others, and then each of us, if we want to immerse ourselves in it, we identify how is it that we can make it better. That's really, so I have endured the pain to get here, both in time as well as just in stupid mistakes. Now, you've never done this. You've probably always used stops. You've never gotten into a bad trade, let it get away from you, stay in it, and then say, should I sell? Or maybe go through the thought process, if I sell now, I'll be the last guy in the market will turn. You've probably never done that. I have done that. Don't do that. Do not do that. If you're doing that now, get out of the trade, come back and reassess, and, call me, send me an email. I'll help you, through that process out here. But the most important thing that we can protect, is our psyche. Second thing is going to be the money. Don't let the market get you down. So the tremendous cost to get there. But here's the deal. When we become disciplined, and discipline means go study the works of H.M. Gartley like I have. Go understand those butterfly and those Gartley patterns and how they work and what they mean out there. And if you'd like to, and you can do that by going through the same process, all that time and energy, or you can have me go ahead and take all those years of experience, all those hours, condense it down into, I've got this workshop coming up. It's 2 3-hour sessions. One is this Saturday. Look, if you can't be there on Saturday, no big deal. It's archived. You've got access to it. You can review it on Monday when it gets posted to the website. You've got access to me. I'm the live Siri. So if you think you're looking for direction, you can have access to me live, whether it's by email, Skype, voicemail. I don't really care how. My passion is to help you and answer your questions in a quick and make sure that you understand it. That's the whole key. This is about coaching. This is about mentoring. This is really about being able to take something that looks complicated, something that's complex, and actually make it simple. And that's what I really want to do. I've taken the great work. Thank goodness for Steve Nissen, who went ahead and spent all that time with interpreters to understand the Japanese candlesticks that were formed and created back at the doji, at the not the rice fields, but the rice exchanges out there, and these Japanese but just using candlesticks will get you in a lot of danger, especially if you don't know how to use them. There's 30 candlesticks out there. If you use all 30 candlesticks and you use those for reversals, you're going to get yourself into some big trouble out there. So come join me this Saturday. Come join me for a journey. This is a journey. It's not a destination. This is a journey. If you want to take your trading game to the next level, I promise you that I can make that happen for you. This is Steve Rhodes. This is TFNN. We've got the Dow. It's moving higher. The S&P is moving higher. The markets are going to move higher, even though it's gradually out here. We'll be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for the afternoon. And we're going to go out to New Jersey. We're going to talk about thunder and lightning to our man, Victor. Victor, what's the closest you've ever come to a lightning bolt while you've been outside? Oh, Victor's gone. We can't have that conversation. Oh, that's too bad. He called in to talk about, he says here, the thunderbolt pattern out there. So I don't know what the question is, but the last lightning bolt, thunderbolt pattern that we had out there, really the big one to focus on and pay attention, I would have to say, would be the S&P 500. If we take a look at that, if we pull that back out here, as the S&P 500 was making its low back here on October the 15th. Oh, Victor is back. Lightning strikes twice. That's a beautiful thing. Victor, how are you doing this afternoon?
I have two questions, not to put you down or anything, but according to Larry Pesavento, there's all these lightning bolt patterns out there and this and that. But are you sure you're not positive because you're a marketing genius and you're trying to sell stuff?
Positive? Absolutely.
Because positive stuff sells stuff. If you were negative, you wouldn't sell stuff. Like Larry Pesavento sees all kinds of things in the market that a negative is going ahead, and the longer it goes on, he's calling it a Thunderbird pattern, an F6 pattern, and that's what W.D. Gann uses. So have you ever talked to Larry Pesavento?
I absolutely. Larry's go ahead, Victor. Larry's one of my original teachers out here.
But he sounds like he's more up front and forward, and you're talking.
No. You don't have to cut Victor off. That's okay. Here's the deal with regard to the market, folks. The market is full of bulls and bears out there, and so each of us look at different patterns, at different tools. Selling. Look. Sometimes people use the word selling.
You sound too happy for me. You know what I mean? You sound too happy for me. You sound too happy. Like you're selling. You're always pumping a product. You know what I mean?
No, I guess, look, we each have our view on that, and being positive, we have choices in life. There's no question about it. And my choice is to be positive. My choice is always to be able to find the good. I even find the good in what it is that you're saying. So it's great that you're asking questions. You know why? Because what you're asking for is conviction. You want to understand what kind of conviction do I have?
I just don't understand how you can vary so much on W.D. Gann. According to that other guy, Larry, he's pretty on the ball, but he's been wrong a lot. But the charts, you know what I mean? I don't know. What are you guys looking at different?
Well, I can't tell you what Larry is looking at in the markets. I can tell you that I use different tools than what Larry does. When I take a look at the pattern that's out there, which is we take a look at the S&P 500, Victor, and I was the only one that I know of inside of TFNN that was calling for a major market bottom. We could go get the replays of that in October.
I remember hearing you say that.
Yeah, okay. So you might say I'm Mr. Positive, I'm trying to sell something. All I was doing was looking at the patterns that are out there. And what I can guarantee...
Your call was bad there for a few days when you called it. I think you called it right when the market was, you know what I mean? You were sucking wind there for a few days.
When the market was moving lower?
Yeah.
Here's the deal. Here's the deal, though. I said the market was moving lower. I didn't say on that, but I didn't give you the actual date. You got to wait for the pattern to complete. And the pattern completed...
What do you think about that Bradley model forms tonight? Is that a market bottom again? Because last time I think it was a market bottom too.
My thoughts. I'm aware of the Bradley model. I watch it. I have not found a successful trading pattern on the Bradley model. I can tell you with regard to the lightning bolt pattern, with it making an A to B equals CD to the downside with a hammer, such as the S&P 500, which it did here. This is a nice hammer candle on October 15th. when we looked at the markets this morning as they were kicking off, as markets were moving down, what I said to folks is I hopped in the driver's seat because I had some activities I was taking care of this morning. We hopped on. We took a look at the Russell 2000. It made the exact same pattern that we saw in the S&P 500 on October the 15th, October the 16th, the completion of a lightning bolt, a one-to-one, a hammer candle that showed up here. We saw price move down and try and test it. And I said if ever there was a buying opportunity, right now would be it inside the Russell 2000, and that's what it's really proven to be out here. Now, not all patterns are going to work 100% of the time.
This looks like the Eiffel Tower to me, man, if you look at the spiders, the way they're going up.
The spiders. Well, if we take a look at the SPY out here, it has absolutely, and we pull it back, what the SPY has done is made one of the strongest V-shaped bottoms that we have seen in a long, long time. This is a huge, strong pattern out here. If I pull this thing back, maybe we had another one back in February 2014. That put in a significant low. But Victor, what I do,
it doesn't GAN do angles and all that. If you go to time and price, this angle is way more than a 45-degree angle, too.
I do not teach GAN angles, and I don't use GAN angles. I take a look at Fibonacci expansions, but I don't use...
What do you use GAN for, then? Because I heard you mention his name.
No. I mentioned H.M. Gartley. Totally different than GAN.
Oh, okay. I thought you were using GAN. Sorry about that.
No. And H.M. Gartley's the guy that really was the one in 1935...
I'm going to start studying him, man.
What's that?
No, I said I'm going to start studying what he does, then.
Absolutely. He's the one that actually created, or is the first that I am aware of that brought the lightning bolt pattern to us. Victor, in 1935, in the depth of the recession, he put together this book. He sold, I think, 100 copies of it. He sold it for $1,500. That's the equivalent. That's the equivalent of a car back then.
You have the copy of it?
You can find. Yeah, I do. You can find it. You can actually find it on the internet.
Okay,
it's out there.
I have to do that.
Yeah, just go check it out. And what you want to do is you really want to focus on page 222. But what you have to do, and what I've done, and what I'll be doing in this workshop this coming Saturday, is I have taken his pattern and made it better, because what I've done is taken advantage of technology. He didn't have the ability to go back and study all these. He didn't have the ability. He wasn't using Japanese candlesticks. He wasn't using a signal as a trigger to actually pull the switch on that. And that's where I've been able to put all that stuff together. So, it's you can call it Mr. Positive, call it whatever you want. I am who I am, and I'll defend myself, and if you spend some time with me, Victor, it's going to rub off on you, and that's a good thing. All right.
Yeah. No, you sound like a pretty cool guy. It's just you keep peachy all the time. All right.
Yeah. Thanks, man. Okay, thanks so much for calling. That was Victor in Paramus, New Jersey out here. All right, so as we go into this close here, as we take a look at the market close, one of the things that the market had an opportunity today was to sell off. And that was taking a look at the VIX index. And what the VIX did today is it tested that 50-day exponential moving average, and it rejected it. As long as the VIX is below that 50-day exponential moving average, this market will move sideways to higher out there. 1501 is the number here at 1377. Folks, thanks so much for joining me here. Stay tuned. I'll be doing the second hour of the Tom O'Brien Show. Don't forget a wonderful and extraordinary workshop that I'm going to be teaching. It's a 7-week trading session. It's coaching, it's mentoring, it's everything. Join me. All the details on the homepage at TFNN.com. Have a great Thursday if I don't see you soon. Tune in tomorrow morning, 9 o'clock for the Traders Ed Show. Take care, folks. Good day, Money Masters and Treasure Hunters. Welcome to the November 20th terrific Thursday edition of the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom while he's away for the evening, and thanks so much for joining us. For those of you not familiar with me, I keep saying that, but that's because the Hotel California here at TFNN opens up an hour early. Yeah, you can check in at 8 o'clock. Our man John Logan kicks things off. Then I'm live from 9 to 11 each day. So if you're trying to figure out, hey, futures are down, futures are up, what does it mean? Then my show is the one that you want to tune into, because we'll take a look at the patterns. We'll identify what is likely to happen. Those archives shows are on Channel 9 and Channel 10 out there. Again, thanks so much for joining us. Our call number 877-927-6648. And give us a call, folks. Would love to hear from you. We had the Dow finish up 33 points. S&P at 4, closing out at 2,052. NASDAQ up 26 points, closing at 4701. NASDAQ here had the opportunity to move lower. Russell 2000, the weak link out out here in the chain. Yesterday down 1%. Today up 1% out here. We learned a lot from the week link. It closed out at 1170. NASDAQ 100 up 19 points. New York Stock Exchange up 10, but we had net advancing issues inside the New York Stock Exchange, 978. That turns its price oscillator back up above the zero line. The sellers are having some real trouble trying to hold down price. Let's go take a look at the, just a little bit of a review so I can give you a good overview of where the market is going and the reason why. Now, many of you are listening on your radio, your mobile device, and hey, by the way, if you haven't checked out Tiger TV lately, it's HD, baby. You got HD charts and everything, so make sure you check that out. Now, many of you are driving home, or if you're not driving home, you're already home. Many of you can tell me in your city at a specific time of the day when there's traffic that gets snarled. If you take an expressway, I guarantee you can tell me on average at what time of the day certain areas are where you want to avoid because you know the traffic patterns. Am I correct or am I correct? The market does the exact same thing. I showed this chart. Many of you may have been listening to my shows back in early October when I was calling a significant market bottom in October as the market was moving lower. Many people thought, what the heck is that guy smoking, drinking, eating, what have you? Well, what I was smoking, drinking, and eating was those same patterns that you know about when you drive your car down an expressway where you're going to run into trouble. Because those same patterns also exist in the market. What I specifically mean by that, if you're watching this on Tiger TV, this is a chart of the S&P 500 over the last 43 years, excluding 1987. So we don't have the October crash, just simply skewing the chart. And so getting rid of that just tells us that the market on average makes its low during the 6-month unfavorable seasonal cycle. That's the so-called sell in May cycle, right? Sell in May, come back on November 1st out here. Well, the market makes its bottom in October, typically right around October the 9th out here. You don't have to use it to the day. By goodness, use this as a guideline, as a really good guideline. Now, as the S&P 500 was making its low on October the 16th, it was making that beautiful lightning bolt pattern that got confirmed with a big hammer candle. There's nothing more beautiful. There's nothing like bulls saying, that's it. That's enough. We're not going to let you push price any further, and we're going to defend this position. That's exactly what the S&P 500 did. Now, here's where we're at. We're kind of a little bit on the fence here because what on a seasonal basis from the last 43 years, the market makes that low, which came in on October the 16th versus October the 9th, right? So things have been slid forward just a little bit, let's say by a week. What the market also does, the market makes a high right around November 2nd. In essence, that's what we did. If we're taking a look at the S&P 500, yeah, it's kind of creeped up slightly, but mostly just traded sideways. Then it moves sideways and pulls back. Now, don't look at this with regard to the steepness and things of that sort, although you can, but just simply what the market does, it makes that secondary low, and that secondary low comes in like tomorrow. It was really November 17th. I just kind of pushed it forward to tomorrow out here. Now, I don't know if today was the day. Today was the day when the sellers had the opportunity to just simply crush the market, to just keep things moving lower, and they couldn't do that. It's got to make you say, something to think about. It's making me say, something to think about. So I don't know if this is going to be put. There is another low that is being put in, whether it was the 17th, which really was yesterday, the 18th, okay? So the low was on the 17th because we saw the market move higher yesterday, today, and so forth. So I don't know if it was then or it was this coming Friday, maybe the following Monday right after Thanksgiving. But that's likely it. So, and then the market moves higher into the end of the year. That is like driving. That is like knowing your city. This is the city that I study. This is the stock market. This is being able to use that same type of seasonal pattern that is out there. And so it is not me that is bullish. It is the stock market and what it does. And if you believe that patterns repeat, and they repeat all the time out there, then you would pay attention to that chart specifically. Now, if we go take a look at the S&P 500 and we come back and look and see what it did. So let's take a look at that. Let me move over to this one other tab out here. And we were showing that just as we were going into the close. So I just want to show you this again here. What the market did on October 16th as was making that low, a 1 to 1.618, A to B equals CD to the downside. Now, I am a master at this pattern out here. and I'm going to be teaching folks about this pattern at a 7-week workshop that begins this coming Saturday. You got a 3-hour session on Saturday when the market is closed. If you can't be there, don't worry about it. It's archived. And then for the following 6 weeks, we'll be sending out updates of the patterns that I teach you. I'm going to be your live Siri. That means you got access to me by email, by voice, by Skype, whatever it might be out there. And I want to teach you this pattern because I want to teach you to master that C to D leg out there. It's only one of the patterns. We'll look at the Gartley buy and sell. We'll look at the butterfly buy and sell. We'll take a look at the Rhodes momentum trading indicators. We'll take a look at price relative strength divergent moves out here. What happens, the ultimate outcome of any type of Gartley pattern, and that's what really formed here, was a Gartley buy. There's really 5 outcomes, and that 5th outcome is that it turns into another A to B equals CD. Well, outcomes 1, 2, 3, and 4 have already gone by the wayside. We are now at outcome number 5, and outcome number 5 is that it happened to form a C point of an A to B equals CD to the upside. What that does is that gives us a price projection here for the S&P 500 in the 2102. That's 1-to-1. Is that what it's going to do? No. 2178 is your 1-to-1.272. A to B equals CD to the upside. So that's what's going on inside the S&P 500. Let's go out to Mike in Pennington. Is it Massachusetts, Mike?
It's New Jersey.
It's New Jersey. I don't know why these guys keep writing Massachusetts, and I just got to write it down and totally remember it. But how are you doing today?
Good.
Now,
Pennington is 5 minutes from Princeton.
5. Okay, perfect. You want to take a look at, looks like GoPro?
Yeah.
Okay, tell me what you're doing.
Well, I've been in and out of this thing, and it's one of the few consistent mistakes I've been making. But I've got 2 call options on it for December.
Okay. For December. Okay, so you got a little bit of time here. If we take a look at GoPro out here, one of the things I was looking at, so if we look at what it did today, it gapped down with volume. Not exactly what you want to see. What it hasn't done is it has not closed this little gap out here, this little breakaway gap that occurred on October 31st. Now, that had 17 million shares to the upside, and today was 23 million shares to the downside. What is likely to happen, and what you want to see, your preference is that this comes down and tests the 69.74 level, rejects that area, and does it with lighter volume. Now, the volume out there, your benchmark really about 11 million shares, between 11 and 17 million shares. What you don't want to see it do is you don't want to see it take out that October 30th low. And that price point is 64.14. If it does go ahead and take that out, then what you're dealing with is an A to B equals C to the downside. Now, what GoPro has done is they've pushed out paper. Right. So they've gone and they've done a secondary offering, and that's not anything that you maybe could have anticipated before you got into it. So, that could itself be a little bit of a problem. But that's
I heard it was coming, and I went up $5 right after I heard it was coming. So I was actually doing okay for a day or two.
Okay. Yeah. So, in fact, when I think it might have been yesterday, the day before, and I saw that it traded up too, and I was kind of like, well, that's unusual. Just to one extent, you could say, wow, look at the demand for GoPro stock out there. So, you're okay, but you don't want to see it necessarily get below 64.14 because that would say, $53 is on the way.
And Amber is the other one I'm looking at.
That's like the first losing trade that you've had all year, isn't it?
Not exactly. But, hey, listen, the other guy wants to know why you can't call the market on the exact day it's supposed to turn around and go up.
I do the best I can. The best I can. Amberella is the one you want to look at, huh? I tell you what, Mike, this next segment we go to Basel, but I will take a look at Amberella. Are you long, short?
I'm long. Yeah.
Okay.
I'm long, and I've been trading around it. Doing well trading around it. So, yeah.
Okay. All right. Hey, thanks so much for calling. Happy Thanksgiving to you as well. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom. We had the Dow up 33, S&P up 4, gold down a buck, trading out at 11.92. But if we take a look at all the miners out here, the page that I'm popping up on Tiger TV, green arrows across the board. It's about 40 some odd mining equities, and every gosh darn one of them in the green out here. That's a beautiful thing. Hey, as we do each day at 20, not each day, but every Thursday at 20 past the hour, we share time with our man Basil Chapman out there. And folks, if you haven't had a chance to ride the Chapman wave, you got to go wax up your surfboard, get over to the homepage of TFNN.com and try out Basil's newsletter service, The Opening Call. Basil Chapman, how you doing today?
Hi, Steve. How are you?
How are you doing today?
Hi, Steve. How are you?
How are you doing today? I'm doing great, thank you.
Good.
Lots of echoes there, huh?
A fabulous job. Sitting in for Tom O'Brien. It's not an easy job, and great work.
No, thanks. Basil, I think we have some kind of audio to communication. The guys will just signal to me when they've got that all squared away out there, but I don't know if anybody else heard that. Echo. Okay, we got it. So we'll get that fixed. We'll come back to Basil here momentarily. He'll come in. Let's go check out Ambarella and see what's going on for Mike in Pennington, New Jersey. He did mention that he was in this thing from a long standpoint. Now, if we take a look at the lightning bolt pattern, the A to B equals CD pattern, inside of this, we can see it's made the 1 to 2 A to B equals CD pattern. Now, typically, if you were owner of the art of timing the trade out here, you would know that when you do a 1 to 2 A to B equals CD in any direction, you typically will have a change in trend. Now, what this equity did is it formed that pattern, and it did it with the shooting star. Remember we were taking a look at the S&P 500 earlier as it was making the low back in October? The daily chart had made that low with the hammer. Well, its cousin, its long-lost cousin, is actually the shooting star. The shooting star is when market's moving higher. And so that says that there's resistance. So, Mike, what the daily chart is telling you is you've got resistance at that November 18th high. If you can get above that, which is $53 even, Stephen, hey, that's one of Basil Chapman's expertise areas. So when we get him on here, we'll get that echo all fixed. Maybe we'll go back and take a look at that for you. Okay, I think we might have him back. We might have him back. So, in any event here, now that's the other side of it is, however, is that high really should be tested $53? Because at this stage, it's a high volume high out here, and that's on the daily chart. If we take a look at the weekly time frame out here, the weekly time frame, wow, this thing is almost everybody in this equity is in a winning position out here. That's a pretty nice thing. You want to talk about throwing a nice party? Well, this is the kind of party that you want to actually throw out here. Now, this thing was an IPO all the way back from October of 2012. And even if we start at the ultimate low that was in here as our A point, well, I just messed that up. Let me see if I can do that one more time here. If we start as the low as our A point, and then we're going to use the swing point high from January in 2014 and a little bit of this. A weekly chart we're looking at. Then May 2014 as your C point. You can see in this case here, the weekly shows just simply the 1 to 1 A to B equals CD. And the way that this is trading, Mike, I would say if price takes out that $53 even Steven high out there, that price ought to move up to $60.96 for you. Guys, just let me know. Just pipe Basil through if when we get him live. So I'll just continue moving on, or we'll get to Basil during the next segment out there. So that was ticker symbol AMBA, Ambarella. Now there are a few things that are getting hammered here out with the numbers after the bell. One of those being GameStop. So if we take a look at GameStop, GME is the ticker symbol. They're out with numbers. Net income $56.4 million versus $68. Let's see, revenues were down, so they did $2.09 billion versus $2.11. But GameStop is coming into their season, right? So if we take a look at it, though, trading out at $39.10. Let's go see what kind of damage is done at $39.10. Now at $39.10, that's going to. Let's take a look at the. So this is a weekly. Let me put the daily chart out here. See if we've got any volume bars. Okay, here we go. So on October 15th, as the market was making a low, it made a most recent low. That price range was $35.82 to $38.81. So it is trading $38.81 and it's trading at $39. So it is not even trading all the way down to that bar. Now, it's not like it's a high volume bar or anything out there, but nonetheless, if it takes that out, if it takes out that low being $35.82, it sets up a small A to B equals CD to the downside out here. That is on a GameStop. I'm pulling this back just a bit further. See what else is out here. So it looks like GameStop, probably an IPO from around the April. My data it's not. My data was just taking a while to do its thing to populate out here. So that is not correct. It looks like. And it looks like that's really, if it breaks through that low, what price ought to do is get down to about the $33 area. GME is the ticker symbol, set to a gap down in the morning. Autodesk out with numbers as well. ADSK. Let's go see what Autodesk is doing. Their numbers go like this. Net income at $10.7 million versus $57 million. Holy shnikes. Their net revenue $618 million versus $555. Okay, that's CFO. That CFO apparently didn't know what he had in his drawers out here, unless they've got some kind of a one-time charge out here. But, we're beating the top line and just getting crushed on the bottom line. This just went ahead and closed at $58. And the traders are loving it out here. It's trading up at $60. That's all you got to do. You just got to see if you can burn through $47 million on top of the profit that they ought to have made by going from 555 to 618 million out there. If we take a look at Autodesk, this thing is trading higher. We'll see if it really trades higher tomorrow on the open. But if it does, it'll be taking out a all-time swing point high from November 18th out here. So these guys must be guiding that they are going to be able to, cure some disease out there. So you've got Autodesk. We've got Ross Stores, ROST is the ticker symbol. Ross Stores out with numbers. They close at 83.21. They're trading out at $87 out here, generating revenues of $2.5 billion versus $2.4. Net income $192 versus $171. That's the way you're supposed to get it done. 87 buckaroonies out here as we take a look at Ross Stores. Let's see where this thing is. Also, 52-week highs out there. Now, with the markets being at highs, that's what you expect to see. You expect to open up charts and see things at 52-week highs. What we know about Ross Stores is this thing here had a swing point from November 18, 2013 on the daily chart. That had 1.4 million shares. That was at a price point of $81.99. You're above that. 1.4 million shares. Today you did 2.3 million shares. Ross Stores is off to the races. You ask me, where is Ross Stores headed to? I would say your best gauge is take a look at expansions of swing points out here. Your 1 to 1.272 expansion of its last major set of swing points as Ross Stores ought to trade to $87.47. Also out with the numbers here after the market close is a Splunk, SPLK. Let's go see if this thing is a Splunkin' or if it's a Munkin'. Hey, it's Munkin'. It's $67. I don't even know what that means, but $67.87 is what it's trading at out here. This thing here does it have a high volume high? It most certainly does not. But nonetheless, this could form a new A to B equals CD to the upside tomorrow if, in fact, it closes above $69.18 out there. For all of you that wanted to hear Basil, so did I. So we'll see. I'll check with the guys, see if we've got the audio figured out there. But if not, go over to the homepage at TFNN.com and check out his fabulous newsletter service, The Opening Call. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom. Dow up 33 points, S&P up 4 points, and now we're going to go back out to our man, Basil Chapman. Basil, how you doing this afternoon?
Hi, Steve. How are you?
Oh, much, much better now that I can hear you. I like to hear you. I like to listen to you, but I was getting you like 5 times.
Oh, is that what it was? Because I had something weird going on this side. So anyway, we resolved the technology is right there to be able to correct it immediately, because when it works, it is a fantastic thing.
Yes. Now we got you HD and sound and HD in your charts. I mean, is that beautiful or what?
That is something special. I know a number of people have remarked about it over the last few days when I've done my Tiger Technicians Hour. It really makes a difference. It's fabulous, yeah.
Absolutely. Okay, so we're going to start off taking a look at the Dow out here in leg D to the upside. Tell us what else you see going on inside the Dow at the moment.
So basically what we're doing here in the methodology that I've developed, the Chapman wave methodology, what you do is you try to identify the most obvious low bar. In this case, it's the Dow at October the 15th. At 15,855. But at the same time, we also look for certain characteristics at the top. And the lettering that I use is alphabetical. Usually somewhere around a peak, D, E, or F is where the fourth, fifth, or fifth six highest peaks is where you get a reversal. And on the 19th of September, 17,350, we got a turnaround from a little doji candle, and the market came down very sharply down to the October low. And we were, in fact, for my subscribers to my opening call, which is a very comprehensive look at the markets every day. I show the parameters for the different indices, and I also have a trader's corner with the positions that we have. So on the way down, it went to 4 lower troughs, and we were mostly short going down. Then we reversed. I was actually away, but we managed to. I sent out an email saying for my daily call saying that on the 16th that there's a reversal that we've got to consider to be a potentially sharp reversal, and we changed positions. We covered the shorts and we went long. Actually, we were long the S&P via one of the ETFs, which we just took profits in yesterday. So one of the reasons is when you make the fifth or sixth highest peak in the Dow or any of the markets, that's when you've got to be a little bit careful. But what I had been saying is these green and red lines here are two moving averages. It's called the MACD, and they are starting to shrink. The distance between the green line and the red line starting to close in. At the same time, the lower, same thing with the green and red lines, moving averages, the slow stochastic is at 93%. When you're over 80%, that's good. But when you're over 90% in the stochastic, that is really positive. It's exactly contrary to what the books tell you. The books say over 80% is overbought and under 20% is oversold. I say, wrong. It's over 80% that you want, whatever you're following, if you're long, that's what you wanted to stay above, because that shows momentum. So right now, I didn't want to go short, even though I had an update, a very rare update today. We didn't go short. We actually added to the long position, the long side. And one of the reasons is that we are actually at peak E, and we just need to go above 17,735 for leg F. There's also an alternate counter. I don't want to make it too complicated. But as I'm looking at it now, I think there's a chance that we could have slightly higher highs. Then we've got to be somewhat careful, because on the short term, we're liable to get a pullback. You know that we've had 26 sessions since the low of October the 15th, and there's only been one sharp down candle. That is so unusual.
No question. Yeah, it's been a extremely, one of the most powerful moves that we have had. Not the most powerful, but one of the most powerful moves that we've had. It is
definitely one of the most powerful. And I wanted to show something here. You were just talking about Amber, I think it was.
Yes.
Right.
Yeah, what are your round number highs out there?
So I thought this is very interesting, because I had a call, I had an email, in fact, and I showed it on my show, my show, which is the Tiger Technicians Hour, 11 o'clock till noon Eastern time every market day. I had a call about it, and I said, so interesting. In the Chapman wave, we went to a peak E, that's the fifth highest peak in Amber, and it was with a round number 53 high. I always follow those very closely. And look, it's just had its sharpest decline. It went from 53 down to today's low of 47.50. So that's the power of the waveform. The weekly chart is still in leg D, and the monthly chart is leg E. But what I thought I'd do, since you've brought it up, and you know that I spend a lot of time with both my subscribers and on my show talking about the volatility index.
Absolutely.
The VIX index in the 120-minute chart went to a peak F today at 15.74, and then pulled back really sharply, pulled back over 2 points to 13.58. So when I try to put this together with the general market, what it's saying to me is, I'm going to move this away just for a second. I want to show that the weekly chart has this beautiful cycle of highs in the volatility index. But once it's concluded, it concludes for a period of time, which is usually weeks to months. So I'm looking at this and I'm saying, how do I assess this rather complex situation here? I've got the volatility index suggesting there's a lot of buying power. Yes. There are a number of stocks that have done very well and still look very good. And at the same time, in all my charts, on my daily charts, most of the indices are either at a D, E, or even an F. So we are really close to some kind of a pullback. So I would just make it, what I've done on my show is I've said, make it real easy. If the volatility index starts to climb, that's the VIX index, starts to climb into the 16.5 area or higher, be careful. We should be pulling back. If the Dow breaks under 17,400, but absolutely on a weekly basis, a close below 17,000, that's a problem. Until then, so far, things are looking good.
Yeah, and a couple of those sectors inside the S&P 500. I mean, the three top sectors, the healthcare sector, the XLV, the XLK, and the XLF. They're confirmed. It looks to me like they want higher price out here.
That's exactly. You know what's so interesting? I've got a peak C in the healthcare, the XLV, which implies it really should make a D above the high of 68.72, and I've got a number of even the XLF is in the same situation, and that says to me there just could be a rotation going into Thanksgiving with slightly higher highs as these particular indices complete their move.
Basil, a friend of mine late last night sent me a chart. Apparently, with all of the high-frequency trading systems that are out there, there's a number of them that are built around words. And the chart came from, it was a Bloomberg chart. I didn't get a chance to really analyze it. I'll try and do that tonight. If I do, I'll send it to you if it makes sense. But it was a chart that took a look at the VIX index when it was making those higher peaks that you were showing out there. And it was associating the word Ebola with it. And
really?
If you took a look, if you took a look at the chart for the number of occurrences that the news media was pushing that out there, it actually tracked. It tracked the VIX index. It was. I know sometimes you look at skyscrapers and other things out there, but it was because of those high frequency trading systems that are out there looking for certain keywords. It just came so late that I didn't have a chance to really study. I've been pretty busy all day.
The theme at that time, that was the theme, and very often you will find that the theme, I would love to track that. I wish I could track that on a word basis. Going to a peak F in a word, it would be very interesting. The acceleration to the top.
Bloomberg's got the ability to do it. I'm going to investigate it further, because Tom's got a Bloomberg system out there as well. So again, I'll take a look at the chart. If it makes sense, I'll send it to you just so you can take a look at it. But it is pretty cool. It is pretty cool to take a look at that.
I'm pleased I heard about that. Thank you very much for informing me. Yes.
Yeah, absolutely. Well, Basil,
I for those people who are signing up to do your workshop and your 7-week sessions, I think it's a fantastic opportunity to be able to get tremendous information. You are a compendium of techniques.
Well, thanks. I appreciate that, Basil. Steve Jobs lived by a principle. Most people believe that their lives have been touched by Steve Jobs because of the iPad, the iPhone, the iPod, and all those types of things. The reality is he lived by a philosophy. And that philosophy was each morning he looked in the window and he said to himself, if this was the last day of my life, am I doing what I want to be doing? And I know that you live that same philosophy as well, that each day when you put together your newsletter service, when you do your show, that you are absolutely doing what it is that you want to do. I share that with you as well. And when it comes to each of us doing a master trader course or whatever kind of workshop, those are the moments that we actually live for, because we get to touch people's lives. And that is really the beautiful thing. So I want to thank you. I want to thank you for doing that.
It makes every day feel like a vacation. Yep.
It does. Absolutely. It does. Basil, have a great evening. Thanks so much for working through those technical problems. I look forward to listening to your show tomorrow morning. Folks, get over to the homepage at TFNN.com and check out Basil's newsletter service. You will not regret it. Basil, have a great Thanksgiving, and for some reason we don't talk before then.
Same to you, Steve, and good luck with the workshop.
Thanks so much. That was Basil Chapman. Folks, we had the Dow finish up 33, S&P up 4, Composite up 26. Yeah, we're going to get the Chapman wave on words out there. We just got to check into that Bloomberg system, see what words we can actually track out there. Folks, we'll be right back for our last segment. You can give us a call at 877-927-6648. Lines are open. Would love to hear from you. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar is ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom. If you caught the segment that we did during that last segment, Basil and I had made mention that a friend of mine sent me this chart here. Now, this is taken from a Bloomberg system, so I didn't get a chance today to really take a look at it in detail. And more importantly, I wanted to get with Tom, because he's got a Bloomberg system, and make sure that the data is accurate, reliable, and so forth. But I believe it is. The person who sent it to me has got a lot of credibility. And if we take a look at it, it is an overlay of the VIX index. The VIX index here is the gold line out there, and then it's tracking stories. It's using the word Ebola out here. Now, this is going back and trying to track this against what the VIX index was doing as it was making its highs out here. Now, I don't know if these are story counts all just simply coming through the Bloomberg system or all of other news feeds, so I don't have enough data here to be able to tell you what the real correlation is. But it is very interesting here to be able to correlate. And as Basil was saying, if you just simply count the peaks here, utilizing from the low here on Ebola being the white one, you probably got 1, 2, 3, maybe you start a little bit lower. You start back here in the early part of September. In any event, I'll get my head wrapped around it, but it may not be for a couple of days out there. Hey, let's go out to Chicago, to our man Robert. Robert, thanks for calling. Thanks for holding. How you doing today?
Hey, Steve. How are you?
Excellent. Thanks so much for asking. How's your Thanksgiving planning coming along?
Oh, yeah, my brother's going to host it, so I'll be heading over there.
Oh, okay. Is he going to get a turkey from Whole Foods?
Well, yeah, hopefully everything from Whole Foods.
There you go.
Right?
Okay, that's right. That's right. That's good. That's a good brother. Now, I know we had talked about this. You were looking to get into this. We had originally talked about the $36 area as being a pretty decent level, and then we talked about it the day before it came out with earnings, and this thing just simply shot up to the moon for this equity, and the moon being resistance, which is the level from the May 6th level, the low there being 47.87. You close at 47.89. That's proving to be an area of resistance here. Is 49 million shares to the downside. So what are you doing with it now? What are you looking for, and how can I best service you?
Do you think I will get an opportunity? Well, if I do get an opportunity to go long, where might that come in? And maybe there's just a better trade out there.
Yeah, you don't. You're at a stage here. It's kind of at a tipping point. It has truly found resistance at 47.87. The question now becomes, with regard to these gaps that it has out here, is Whole Foods really just setting up a consolidation pattern, which would basically be from the bottom of the gap out here, and that's from the level where it really moved down around the 37, now really 36, but I'm just kind of using the gaps as my magnet areas. Robert, if it can't take out this 47.87 area, at a minimum, what Whole Foods ought to do is get down to the bottom of that breakout area around 43.39. It always gets now. You'd want to see it come back there on light volume, meaning well less than 27 million shares. Your ideal buy point on this is probably around 40.64 if it pulls back with lighter volume. Now, if this breaks away from this 47.87, then it needs to be reassessed out here. Could truly be a significant change in trend, which it very well may be. But right now, it's just trying to get through a pretty huge supply line. All those folks that were holders as of May 6th and earlier, what they're doing is there's a shift. They're just trying to get their money back. And it's probably not the folks from that trading session. It's more like the folks that had Whole Foods up here at the highs, maybe in the $65-ish area, saw a gap down and thought it would come back and rode it all the way down. So there is clearly a supply line out there. Does that help
wonderful.
you?
Yeah, it very much does. Yeah.
Yeah. Okay. Excellent. Good to
thank you.
Always good to hear from you. Have a happy Thanksgiving. If we don't talk before then, that was Robert in Chicago. And stay warm out there. Now, I haven't checked out the weather forecast. I think it's supposed to maybe warm up a bit before the next cold freeze comes through there. If we take a look at natural gas today, natural gas trading out at $4.61 out here. Now, inside, let's go over to the UNG, actually. Let's see how volume and where this actually closed. I believe the UNG today went ahead and confirmed an A to B equals CD to the upside. And all that the UNG needed to do was to close above 23.49. That was a swing point from November the 7th. Now, I'm long UNG. And, of course, my concern when we got into the trade, we scaled into this trade out here, and a little bit of a concern was that 17 million share day. I knew price would get back up there because it was a high volume, high, untested out here. We were in the proper season. This is a seasonal cycle trade, which should last through the early part of December, maybe a little bit longer than that. And at this stage of the game, we did get it closed today, even though I thought, hey, how is it going to handle that volume? Well, today, as an example, 22 million shares, taking out 16 million shares, so it had no problem handling the B point. So you do have a confirmed A to B, equal C to the upside. It says that the price on UNG ought to get to $25.15 as its next target, more likely the $26 area. Of course, in order to really trade this, we really have to keep our eye on what's going on in the futures market. So be careful of what it is you trade, the underlying instruments, and so forth. Let's go out to Largo, Florida, to Jane. Jane, thanks for calling. Thanks for holding. How are you today?
Hi. Well, about a month ago or so, I called the radio station, talked to Tom, and I was going to buy Intel.
Yes.
And he really discouraged me from buying it, but I thought I heard today, and I'm not sure, that Intel went up like 2% today.
Well, it closed. It probably did. It closed at the top of its session, 35.95. It's got a nice wide-ranging bar, some nice accelerating volume out here, and so Intel. That's on a daily basis out here. Let me pull this back a bit further, see if this thing has got anything that it's running into. I'll put it on a weekly basis.
He told me the CEO or somebody was going to be leaving in December, and so it wasn't really a good idea. Something about that.
Yeah. If this can close above the September 8th high, just put the weekly chart up on my screen, 115 million shares. You're already at 131 million shares for the week. That would be pretty bullish for Intel out here. I'd really have to study this a bit. What you really want to see Intel do is probably take out levels, the high here from all the way back in 2002, Jane. And that high is $36.78 out there. Now it's 234 million shares. And price is moving up there with lighter volume. So you still may get that opportunity to buy Intel. If it does pull back, I don't know that it will, but if it does pull back, I would say that your entry points on this are probably right around, about $29.56 if it's pulling back with light volume. Okie dokie?
That's about what I was thinking, yeah.
Yeah, okay. You bet. Have a nice day. Folks, thanks so much for tuning in here. Hey, don't forget, get over to the homepage at TFNN.com. Sign up for my workshop. It'll be a journey that you will absolutely love. Have a great evening, folks. Look forward to seeing you sometime soon, maybe tomorrow morning, 9 o'clock. Take care now.